BCE, the parent company of BNN Bloomberg, has cut its dividend by 56%. The plan here is to strengthen the balance sheet while maintaining flexibility. Let's get more from Dan Rohinton, portfolio manager at IA Global Asset Management. Dan, great to see you. Is this like ripping off a Band-Aid? The Desjardins, for example, says, yeah, institutional investors were expecting this.
Yeah, it was completely telegraphed. And when you look at just some of the decisions that were made, this was one of the most telegraphed dividend cuts that we've seen in a very long time. And the question is really just what were the reasons behind it? It was clearly the capital intensity that came with Ziply Fiber, along with a deterioration in the actual wireless business in the Canadian market, where it remains broadly competitive. ARPUs are coming down, and net subscriber growth, as it's known, has actually been tipping slightly negative due to the immigration controls that had been put in place last year.
What is your prediction for the stock then? Let's put up a 5-year chart. Is it likely to be near a bottom here now that the uncertainty is removed?
Look, I don't think it's an obvious rip off the Band-Aid, rip higher, but I think there's a chance of it. And the reason I say that is BCE has been for many, many years, and for good reason, a stalwart, consistent dividend payer. So there's a lot of people that use the BCE dividend. So seeing a cut like that might create a bit of a, call it a share flowback issue, where institutional investors might be more comfortable with where the story is versus a quarter ago, or let alone 2 quarters ago. But retail shareholders might be overwhelming the institutional net buying. So I think it's a coin flip what happens from here. But I do think it's important to just take a step back, Andy, how we got to this stage. It's a deteriorating wireless conversation happening in the Canadian market due to just a bit more competitive intensity and overall subgrowth, that the great years that we've seen in the industry are over, and now it's about flat. So it's really playing defense as the best kind of offense you have right now. And the US is still a very material capital sink for BCE. So dividend cut is absolutely necessary. And the question the biggest question I have out of this is to really slightly change the conversation a little bit about the network fiber JV that they just did and this morning as well. So they optioned away, from my initial read of the situation, a lot of the fiber build out that Ziply was meant to be participating in. So PSP has bought in 51% of a JV for the majority of the fiber build out, which is why the multiple for Ziply was so high in the first place. So I have more questions for management than answers after this call, but I do want to congratulate the accountants, lawyers, and investment bankers on Christmas coming early once again.
What do you mean Christmas coming earlier? Coming early in the sense, what do you mean by that? Christmas comes early.
So, they tend to get paid when the deal happens in the first place. So Ziply was a big transaction. So congratulations for last year. And this year you spin out part of those assets along with the transaction for MLSE, finishing that off. So it's a very busy capital allocation year. So accountants, lawyers, investment bankers tend to be the big beneficiaries because they get the fees.
So they're coming in. They're teaming up with the Public Sector Pension Investment Board. PSP is committing more than $1.5 billion to this deal. So is there downside? Is BC's giving up some profitability, I guess, over the longer term?
Yeah, and I think the best way to think about this is the story that was given when Ziply was purchased by BCE was, here's an incumbent fiber base. Fiber is the best asset. We totally agree with that thesis. Here is the big option value that comes with I believe it was about 5 to 6 million more homes that could be passed in the same area that Ziply operates, but we're only at about 1.5 now. The story today, fast forward to today, is we have 1.5 million homes. We could build, I believe, about 500,000 more, and then the rest is a joint venture 50-50 with PSP. So the whole point of paying a huge multiple for a step-out asset in another country, in a very concentrated geography, is that you can build out and expand the cash flow many, many times. So what PSP does is they basically front load some of the capital for Bell, so Bell doesn't have the capital strain, but you're also giving up the upside, which you were excited about with Ziply as recently as 2 quarters ago. So I do think that this is really a defensive move by BCE and a very opportunistic win for PSP from my initial read of the situation. But there's a lot more details and math to go into. But the whole point of Ziply was 8 million homes in the future, 1.5 million today, and now of the 5 million to 6 million homes that could be built out in the future, BCE can only get 50% of that because it's now in a JV.
And the actual wireless subscribers down. Now, I know in immigration is tailing off, but that seems amazing. The actual wireless customers falling off after years of growth.
Yeah, it's just a different era and maturity, right? Like, that's really call it the inline part of the conversation for BCE and the other telcos in Canada is Quebecor with their flanker brand is a bit more aggressive. So they're taking subscribers on net, but the aggregate population growth in Canada coming down from very, very high levels of growth before just means that there's less subscribers to chase after. So the telcos are trading market share amongst one another, and Quebecor tends to still get some sub growth along the way. So everyone else has to donate a little bit or just trade with one another.
Dan, thank you very much. It's always great getting your insight. Dan Rohinton, Portfolio Manager at IA Global Asset Management. We are going to hear more about BCE's decision to slash the dividend, as well as future growth plans and this deal with Public Sector Pension Plan Investment Board when we speak with the CEO of BCE, and that's coming up today at 3 p.m. Eastern Time, noon Pacific.